Hello everyone, I am Manisha Rohilla, Assistant Professor in Maharaja Agarsen School of Management at Maharaja Agarsen University. Today we are going to discuss about the topic accounting for consignment. Let us start with the meaning of the consignment. Consignment is an agreement between the consignor and the consignee in which consignor will send the goods to the consignee and consignee will receive the goods from the consignor and will sell the goods on behalf of the consignor, and for these services he will receive the commission from the consignor. There are two parties involved in the consignment. One is consignor and another is consignee. Consignor is the person who sent the goods to the consignee and consignee is the person who received the goods from the consignor. Next topic is features of consignment. So first feature of consignment is in the consignment accounting, consignor just transfer the possession of goods to the consignee. Second point is the property, the ownership of the goods will remains with the consignor. It is not passed on to the consignee. The relationship between the consignor and the consignee is that of principal and agent, in which consignor will be the principal and consignee will be the agent. Fourth feature of consignment is the consignee sell the goods on behalf and at the risk of the consignor, and for his services consignee get a fixed commission on the sale proceeds. Consignee is not responsible for any loss, any damage or any destruction of goods. Next is importance of the consignment. In the importance, first point is to get the advantage of difference in price. Due to imbalance in demand and supply, prices are different from one place to another place. So it is not possible for the producer to sell goods personally to go there where he can get the maximum price for his goods. Therefore, he can sell goods at different places through his agent. Second point is to facilitate sales. A producer has not possessed the knowledge of prevailing trading customs and other circumstances in the market of the country and outside the country. So he cannot sell his goods conveniently at other places. Agents are well aware about their market and they can sell goods profitably. Third point is to bridge the gap between the purchaser and the seller. When the seller and buyers are living far away, seller can supply goods with the help of agent to the purchaser. Hence, the process of consignment bridges the gap between the seller and the buyer. Next is difference between consignment and sales. First point of difference is ownership. In the consignment accounting, ownership of goods will remain with the consignor. It is not passed on to the consignee. But in case of sale, ownership of the goods is immediately passed on to the buyer by the seller. Second point is risk. In case of consignment, risk is not transferred to the consignee. It remains with the consignor. But in case of sale, risk is transferred to the buyer. After sale of goods, buyer will be responsible for any loss, any damage or any destruction of goods. Third point is relationship. In consignment, the relationship between the consignor and the consignee is that of principal and agent. But in case of sale, relationship is that of debtors and creditor, in which buyer will be the debtor and the seller will be the creditor. Fourth point is accounting treatment. In case of consignment, consignee has to submit account sales statement to the consignor. But in case of sale, a buyer has not required to submit such kind of statement to the consignor. Next point is expenses on sales. In case of consignment, all the expenses which is related with the goods are ultimately borne by the consignor. But in case of the sales, all the expenses related with the goods after the sales are borne by the buyer. Next point is commission. In consignment, consignor give the commission to the consignee for the sales. But in case of sale, seller does not give any commission to the buyer. Next point is return of goods. In case of consignment, consignee has the option he can return the unsold goods to the consigner. But in case of sale, buyer cannot return the goods to the seller unless without any genuine reason. Next point is payment. In case of consignment, consignee is not liable to make the payment till the goods is sold. But in case of sale, after the sales, purchaser is liable to make the payment to the seller. Next point is settlement of dispute. In consignment accounting, if there is any dispute, that dispute is settled under the Indian Contract Act 1872. But in case of sale, if there is any dispute, that dispute is settled under Sale of Goods Act 1930. Next is terminology used in consignment, terms which we used in consignment. First point is our pro forma invoice. Pro forma invoice is basically a statement which is prepared by the consigner, and it generally contains the details of goods regarding quality of the goods, quantity of the goods, price of the goods, and it is sent by the consigner to the consignee at the time of sending the goods. Next is expenses on consignment. When we send goods to the consignee, there are some expenses which is incurred on the goods. These expenses can be borne by the consigner or can be borne by the consignee. Expenses of consignment can be of two types. One is non-recurring expense and another is recurring expenses. Non-recurring expenses are all those direct expenses which are made to bring the goods to the place of agent. And recurring expenses are all those indirect expenses which are incurred after the goods have reached the place of the consignee. Means recurring expenses are those expenses which are incurred after the goods have taken by the consignee, and non-recurring expenses are those expenses which are made to bring the goods to the place of the agent. Next is commission. Commission is the remuneration which is payable by the consigner to the consignee for his services. Commission are of generally three types. One is ordinary commission, second is del creditor commission, and third is overriding commission. The first is ordinary commission. Remuneration payable to the agent to the consignee for his services is termed as ordinary commission. Second is del creditor commission. Del creditor commission is payable by the consigner to the consignee when the consignee will take the responsibility of recovery of all the debtors. Then in that case, he get an extra commission, and that commission is called del creditor commission. Third is overriding commission. Overriding commission is a special type of commission in addition to normal commission with the object to sell goods at a higher price. When the consignee will sell the good at a higher price over the invoice price, then he get an extra commission. That commission is called overriding commission, and this commission is generally offered when new line of goods is introduced into the market. Next is difference between del creditor commission and overriding commission. First is objective. Objective of del creditor commission, it is allowed to the consignee when he undertake the risk of bad debts arising out of credit sales. Overriding commission, it is allowed to the consignee as an incentive to push sales or to effect sales at a higher price. Guarantee. In return for the del creditor commission, consignee guarantee the proceed of consignment sales, but in return of the overriding commission, consignee does not give any such guarantee to the consigner. Next is competition calculation. Del creditor commission, basically it is calculated on the total sale, but if specifically agreed, it can be calculated on credit sale also. And overriding commission, it also depend upon the terms of agreement. It may be calculated on the total sale or on the sales excess of total sale over the invoice price of the goods sold. कि अगर consignee invoice price से ज़्यादा प्राइस पे goods को सेल करता है, तो in that case जितनी सेल वो invoice price से ज़्यादा पे करेगा, उस पे भी हम उसको calculate कर सकते हैं. Next is by whom. The difference between pro forma invoice and account sales. First point is by whom. Pro forma invoice is prepared by the consignor and sent to the consignee at the time of sending the goods. Account sale is prepared by the consignee and sent to the consignor. Subject matter in the pro forma invoice contain full particular of the goods consigned, the quality of the goods, quantity of the goods, price of the goods sold. Accounts sales shows full particular of the goods sold, expenses incurred on the goods, commission receivables, remittance made and the net amount payable to the consignor. Next is responsibility of payment. Pro forma invoice does not show the consignee liability to pay the amount shown in the invoice. Account sales shows the net balance for which consignee is liable to make the payment. To be sent, pro forma invoice is sent only once along with goods sent to the consignee, but account sale is sent at the periodical intervals. Next terminology is advance by the consignee. Advance is a common trade practice for the consignor to demand some advance from the consignee as a security. Advance can be in the form of the cash or through bank draft or in the form of bill of exchange. Consignee will send some amount as an advance before or after he received the goods from the consignor. Advance received from the consignee should not be credited to the consignment account as it is not a part of the sale proceeds. Next is accounting procedure. In the consignment accounting, we will prepare the following accounts. First is consignment account, second is goods sent on consignment, third is consignee account, and fourth is stock on consignment account. So in the book of the consignor, first account is consignment account. Consignment account is basically a nominal account on the debit side of which we will record all the expenses, and on the credit side of which we will record all the incomes. So on the debit side we will show all the expenses, and on the credit side we will show on the all the incomes related with the consignment. Next is goods sent on the consignment account. The number of goods which is sent by the consignor to the consignee will be recorded on the credit side, and balance of this account we will transfer to the trading account. Next is consignee account. It is a personal account on the debit side of which we will write amount owing from the consignee, for example sales, and on the credit side of which we will write amount owing to the consignee, for example expenses and commission. Next is journal entries in the book of the consignor. We will pass the following journal entry in the book of the consignor. First, when the consignor will send the goods to the consignee, entry will be consignment account debit to goods sent on consignment account. Second entry for the expenses which is incurred by the consignor, entry will be consignment account debit to bank account. Third entry is for the expenses which is incurred by the consignee and commission of the consignee. Entry will be consignment account debit to consignee. We are crediting the consignee account because consignee is our creditor according to this entry. Fourth is sales recorded on the account sales. When the consignee will sell the good in the market, then the entry will be consignee account debit to consignment account. Next is for normal loss. For the normal loss, there will be no entry. Next is insurance claim received for normal stock loss. If we will receive any claim from the insurance company for the normal loss, then the entry will be bank account debit to consignment account. Next entry is for the abnormal loss. It is not necessary we can get the full amount of loss from the insurance company. Sometimes we receive only half amount, three-fourth amount of the three-fourth claim from the insurance company. The amount of insurance claim which we will receive will be debited in the bank account. Remaining amount of loss we will transfer into the profit and loss account, and we will credit the consignment account. Next is payment from the consignee by check or bill. At the end, when the consignee will remit the amount, balance amount to the consignor, In that case, entry will be bank account debit, bill receivable account debit to consignee account. Next entry for the transfer of balance of goods sent on consignment to trading account. Then the entry will be goods sent on consignment account debit to trading account. Last entry is for the profit and loss on the consignment. If there is a profit, entry will be consignment account debit to profit and loss account. And if there is a loss, then the entry will be opposite, profit and loss account debit to consignment account. Next is from the above mentioned entry, we will prepare the consignment account, and on the debit side of consignment account, we will write about to goods sent on consignment, to consignor expenses, to consignee expenses, to consignee commission, and on the credit side, we will record consignee sales, claim received from the insurance company. If the credit side of this account is greater than the debit side, then we will earn profit, and profit will be right on the debit side. And if the debit side of this account is greater than the credit side, then there is a loss, and that loss will be recorded on the credit side. Next is valuation of unsold stock. How we will calculate the value of the unsold stock. Unsold stock is that stock which is left with the consignee or which is not sold by the consignee. So for calculating the value of unsold stock, following formula will be used. First, we will write cost of unsold goods with the consignee. Then we will add proportionate non-recurring expenses of the consignor, and then we will add proportionate non-recurring expenses of the consignee, and by applying this formula we can calculate the value of the unsold stock. Next is accounting treatment in the book of the consignee. Okay, that in consignee account, which account we will prepare. So in the consignee account, we will prepare two accounts. One is consignor account, another is commission account. Consignor account will show the sales expenses of consignor and amount due to the consignor. And commission account, it is a nominal account in nature. Commission received by the consignee will be recorded on the credit side of this account. Next is journal entries in the book of the consignee. We will pass the following journal entry in the book of the consignee. So first entry is good received from the consignor. When the consignee will receive the goods from the consignor, then there will be no entry for that transaction. Second is expenses paid by the consignor. Whatever be the expenses of the consignor, for those expenses, consignee will not pass any entry in his book. Next is commission received. When consignee will receive the commission from the consignor, then the entry will be consignor account debit to commission received account. Next entry is for expenses paid on behalf of the consignor. When the consignee will pay the expenses on behalf of the consignor, then the entry will be consignor account debit to bank account. Next entry is for discount allowed to the customer. Then the entry will be consignor account debit to debtors account. Next is for bad debts borne by the consignor. If the amount of bad debt, if the loss of bad debt is borne by the consignor, in that case entry will be consignor account debit to debtors account. Last entry is for bad debts borne by the consignee personally. If the bad debts is borne by the consignee, in that case entry will be profit and loss account debit or bad debts account debit to debtors account. Next is for cash sales. When consignee sell the goods in cash, entry will be bank account debit to consignor account. Next is for credit sale. When the consignee sell the goods in credit, entry will be debtors account debit to consignor account. Last entry is for payment to the consignor by check or bill. When the consignee will remit the amount to the consignor through check or through bill, then the entry will be consignor account debit to bank account to bills payable account. Next is normal loss. Normal loss is that loss which is occurred due to natural calamities, cannot be controlled beyond the control. So that loss is called your normal loss. When the goods are lost or damaged due to normally expected but unavoidable causes such as leakage of oil, ghee, evaporation, shortage of coal, flour or vegetables due to handling and weighing, drying, etc., it is called normal loss. Normal loss should be considered only while calculating the cost of unsold stock. Normal loss form the part of cost. The cost of unsold stock increase proportionately due to such loss. Next is abnormal loss. Such loss of goods which is accidental loss or loss due to negligence is called abnormal loss. It is unexpected loss of goods due to fire, flood, earthquake, war, soil insects or by theft etc. is called abnormal loss. Such type of loss can be avoided by the efficient management. The value of abnormal loss is calculated in the same manner as that of value of the unsold stock. Value of abnormal loss is calculated in the similar way as we will calculate the value of the unsold stock. Thank you to all.